Hey everybody, it's me, the Einstein Wall Street from the balcony of New York Stock Exchange, the greatest financial institution in the world. We are here at the end of June. I can't even believe we're already at the end of June, on the corner of Walk and Don't Walk, on the corner of Wall and Broad, here to talk to my man, Tim Anderson. My opinion, one of the brightest men on Wall Street, who knows markets in the broadest sense of the word. He knows so much. Look, I love letting people tell their story, but you know what, Timmy, on a daily basis, is its ability to really look at the big picture, trying to analyze markets, trying to analyze stocks, trying to analyze the indices, and really put together a little bit of politics, a little bit of markets, some numbers here and there, economics, and make sense of it all. No matter what, you walk up to Tim, he's going to make sense of the story. My man, welcome. So, end of June, end of the half, end of the quarter. One of the wildest, most tumultuous first half of a year probably in history. New administration, new market, interest rates, tariffs, so many moving parts, wars, geopolitical, global confrontation. So much is going on, right? We went through like the first part of the year, coming out of 2024, which is one of the most extraordinary years, 218 trading days, 58 of them were record closes. We came in the beginning of the year, wild card, Mr. Trump, all fine and good. This is not a political conversation. Market on February 19th. Now we know, with all the crashes and consolidations and sell-offs we've had in history, the only component that is the same in each one of the pullouts, the pullbacks, sell-offs, crashes, and I don't use the word crash lightly, has been that before they happened, we traded at record highs. Once again, this was the same case with the sell-off that happened on February 19th. That was the day that Mr. Trump said, I'm imposing out of nowhere, and we knew that tariffs were part of his policy. That's the bottom line. He's the new sheriff in town. That I'm imposing tariffs on Mexico and China, Mexico and Canada, 25%. And that, for the next probably 11 weeks, began this tumultuous slide of the market to the lows of April 9th, down 20+% in a market based on the way the dissemination of the information was done. All fine and good. It happened. We were down there. When we were in the middle of it, it didn't look like we were going to bounce back, but we did. We were able to get back all plus the losses. Today, we are here on June. I don't even know what friggin' day it is. We are at trading
25th.
at thank you. Record highs across the board in every indice, basically, which is amazing, taking into account all the moving parts, all the controversy, all the unknowns that is happening in our world, in our economy, in our markets, geopolitically, and all that kind of stuff. To be where we are in the market is extraordinary. Nobody better to break this thing down than my man Tim. Tim, welcome. I'm so happy you're here. Like, we can go back, we can go forward. I just want, where are we today? How do you break this all down?
I just think where we are right now is we're 3.5 weeks, 3 weeks after the start of the military altercation, serious military altercation between Israel and Iran. Obviously, that there's been some altercation between those two countries going on for years,
decades, sure,
decades,
right,
millenniums.
Right.
But where we are now is that we're a day and a half into an alleged ceasefire. We don't know exactly what type of an agreement there is, but it's certainly clear that despite some controversial press reports about how successful or unsuccessful the U.S. bombing of the nuclear facilities in Iran were, the bottom line is Iran capitulated. Now, what are they going to give up? We don't know yet. We don't know if there's going to be a signed agreement. We don't know if there's going to be, exactly what they're going to say or not say about their future nuclear ambition. But if they didn't feel totally beaten, there would probably still be bombs and missiles going back and forth between Israel and Iran. So they have basically capitulated to a certain degree, and I don't think we can underestimate how significant that is.
Okay, so old Wall Street adage is that once the bomb, in anticipation of that's a cancer, sorry about that, a geopolitical confrontation, markets tend to sell off, but when there's blood in the streets and the bombs start to fly, that's the time to buy the market. And this was once again exactly that. If you go back to the Ukraine war, and surely all the wars that have happened before that, the month anticipation when Russia was sort of taunting the Ukraine that we were going to attack. Markets sold off significantly. The minute that it was that the basically declaration of war on Ukraine, the market rallied over 1,000 points that day. Once again, we've had bits of confrontation over the last couple of weeks, whether it started with the U.S., started with Israel, started with Iran, whatever it was. We were in the middle of it. We were thrust into it, but to be having all those unknowns, however this thing looks like on the other side, the fact that we are where we are in the market. You and I have talked about tech a lot. We've talked with Dan Ives, right? What's been leading this market? We are at the record high. We could easily be sitting here having this conversation with the market down 1,000 points, and we could probably come up with an explanation why that makes sense.
Right.
But we are not. We are at record highs, and now I'd love us to come up with an explanation like, why are we where we are?
I think because the earnings have been good, okay? There was a lot of concern over that. And the tariffs have really been just a non-event so far in terms of impact on the economy. Now, clearly, some of the tariffs we don't know what all the tariff deals are going to be. Correct. There's a few of them that are in place, but even the fear of tariffs has not produced any meaningful or identifiable inflation data points yet. In fact, inflation is lower than it's been since very, very early 2021.
Right.
And also there are some signs that the Fed seems to feel some pressure for the first time in quite a while, particularly Jerome Powell.
Right.
That, look, they were cutting rates when all of the numbers were a lot higher, and now if you would compare what all their inflation and job numbers are now, there's more of an argument to cut rates, but they haven't been doing it. Allegedly, they're concerned about the uncertain impact of what the tariffs might be.
Meaning stagflation and
but
non-growth.
Now there have been some Fed officials that have been speaking out about, look, we could very likely cut in July. I think the odds of them cutting in September are very high, and the odds of them cutting in July, where they were very low 2 weeks ago, are increasing significantly. My view was they could have very easily justified cutting at the meeting in June. Okay,
question.
So that is a positive for the market. The market is a discounting mechanism, obviously, and the market will say, look, they don't have to cut rates today. All they have to do is signal to us that they're very likely to cut rates at the next meeting and or at the following meeting also to get look, inflation's at 2.25%. Rates are at 4.25%. Right. So you don't have to have a PhD in economics to know that they're not in line with reality right now.
Right.
So that's a positive.
Okay.
That's a positive.
Okay.
And also this idea that this long running confrontation that reached a crescendo with this 10-day war between Israel and Iran might very likely be over. There seems to be at least a truce for right now. We'll see how long it holds. And the insinuation that there could even potentially be regime change in Iran if the people in Iran were to go to the streets and force that issue. That would be such a wildly positive event for the world economy, much less the Middle East economy. Iran is a country of 90 million people, where there are many Iranian billionaires around the world.
Absolutely.
And it's a highly educated country, and always was a very, very wealthy country. Unlike some of these other countries,
smaller Middle Eastern countries
in the Middle East,
are not participating.
We're talking about a country of 90 million people.
Okay, and also one of the brightest. Look, that is the cradle of civilization.
Yes.
Iran goes back to the beginning of time.
Of course it does. And so, look, compare it to the Berlin Wall coming down in 1991, which then the market went into this mode where it went to new highs after we got out of the Resolution Trust savings and loan debacle. We got to new highs in 92 and 93, and people kept saying, well, where are we going here?
Right.
And that was what became known as a peace dividend rally.
Peace dividend.
My view is, and has been for a while, that you get a resolution there, and ideally if you got a resolution, although it's very difficult to pull off, a resolution in the Russia-Ukraine conflict.
Right.
This is a bigger resolution, okay? And it could force Putin to make a deal in Russia-Ukraine. This could be a peace dividend like what we saw in the early to mid 90s, going into what became the internet revolution before anybody really was talking about the internet.
So, look, you're talking about, look, the world is an amazing place. It's got so many moving parts. Normally, historically, politics, geopolitical conflicts and markets don't often affect each other in a big, long-term way. We often see them be a short-term emotional reaction to it. But net, it's not what it's about. Politics, even internal, domestic politics of the U.S., don't really always cross lines with our markets as well. They kind of usually go side by side. Sometimes they'll bump. But you're talking about, look, first of all, a feather in the cap to the president, and I don't give those feathers out that often, but I give credit where credit is due. Whatever one thought of his style and his approach and his policy when it comes to think where we are in the market. Look, I'm a firm believer the market tells us what it thinks of all the information, and so we are now not trading down 1,000 points. We are trading up and trading at record highs in the midst of all of this unknown, and so to think that we could have a resolution and a potential change, regime change in Iran, and a possible resolution in the Ukraine-Russian conflict, and a possible resolution, although it's probably not going to happen, between Israel and the Middle East, right, is extraordinary. And it feels like we know that the market is always forward-looking. And so if the market is correct and it is forward-leaning, it's basically saying that on the horizon, we see a lot of positive happening, that we are coming out of an earnings season that was solid. There was a while there where when we were in the depths of April, when we were down 20%, when Jamie Dimon couldn't even give guidance, United Air couldn't give guidance, companies could not give, General Motors and Ford were talking about. Now look, we have still not even touched on tariffs, and that is what we're going to talk about in a minute, and that is still a looming dark cloud over everything, and that could in a week or in a month, we could be sitting here having a different conversation once the deals are made or not made and all that. But to stay where we are, this market is a day at a time thing. So to sit where we are today and not be down 1,000, but be at record highs and be in the midst of all of this uncertainty, but with still looming resolution in so many ways, it is, give credit where credit is due. It's an incredible place to be at.
And we haven't even touched on it yet, but we're also right at the precipice of this big tax bill, budget bill.
The big beautiful
bill with the current sort of, not really official, but the desired deadline of July 4th to be passed.
Right.
Now realize that President Trump is in the Netherlands right now at NATO. He had a lengthy press conference.
Right.
He met with all of the NATO leaders. He's going to come back to Washington. And with the increased political clout, as if he needs any more political clout, with the increased political clout he's got from all of the NATO leaders agreeing to up their spending, ex-Spain, to 5% of their GDP, and with this action in the between Israel and Iran, you know that he is going to go right to the leaders of the Senate and right to the leaders of the House and say, he's already told them they're not allowed to take a vacation.
Right.
Okay.
They're not going on.
Now they're
on
not
their
always
summer sabbatic. They're always going on.
They're not
summer.
always going to listen to the president.
Right.
The 4th of July is 12 days from now.
Right.
Or a little bit less than that, actually, 10 days from now. And he's going to tell them, I don't care what you got to do, 24/7. You're going to sit here. Done. You're going to get this bill passed.
Correct.
Because you'll notice there's been no really clarity on a lot of the trade deals, and I think that once the budget bill is passed, then that eliminates a lot of uncertainty to make it a lot easier
some groundwork for the tariff story.
to have the final stages of some of the trade bills, which I think conceptually are there.
Okay.
But they want to know what the details are of the budget bill
Right,
before they finalize the trade
okay.
deals.
I like that. That's interesting perspective.
So look, one way or another, and I wouldn't be terribly surprised if he signs this thing on the 4th of July
Right.
with the fireworks going off in the background.
Great photo op.
It would be a typical Trumpian moment
Absolutely.
to do that.
Yeah. So look, so taking into all of that, right, and looking at where we are in the market. Tariffs was what took this market down 20%. It's very legitimate. It is a major concern. It is a policy issue, but it is one fraught with so much uncertainty. So none of it's really been resolved. Maybe there is a lot of backdoor diplomacy going on. We know that we needed a major deal with China, their largest trading partner. We have the looming July 9th postponement with the EU, which was beautifully handled in my opinion. The head of the EU is the first person, when Trump said, I'm going to impose tariffs on you, she immediately came back at him in a positive way and said, Mr. Trump, we're ready to make a deal. We need a little more time. He said, I appreciate the respect. I'll give you till July 9th. And that's not looming, but it's right after
July 4th.
Correct. So and also the expiration of the 90-day pause is coming up. So in terms of tariffs, which are really the most, look, our attention has been diverted by a lot of things. The big beautiful bill, the war in the Middle East, the Israeli conflict, and all that stuff has diverted our attention from what has basically been our curation since February, March, April, which were some of the darkest days of Wall Street. In the middle of April, we were down 22.8%, right? And that was dark. And I said to you, and we talked about it before, that I'm not sure if we're going to look back at this time as a time that we should have sold because it's going to get a lot worse, or is this going to be one more of those buying opportunities? It turned out to have been a buying opportunity. And I've apologized and mea culpa myself multiple times since then, because when we were in it, I was not clear that was going to be the case.
No, it was not clear.
It wasn't
I don't
clear to
think
you or Dan or anyone.
The least likely scenario was that we were going to have a V-shaped bottom in the stock market. That's exactly what we had.
Yes.
And now we're right back at or near
record highs.
The record highs, within 0.5% on the S&P 500, and you can just feel that if you have a few items of uncertainty checked off, you get that big, beautiful budget bill passed, and then you get 2 or 3 trade deals announced, and then you're in the second week in July, and then you're starting to get earnings reports. And unlike the second quarter, when the tariff issue was a major overhang, then companies are going to say, well,
nothing bad happened, nothing to see here.
Unlike last earnings period, when we felt like we couldn't give any guidance. Now we can give some guidance. This is what the rest of the year looks like, and they're probably going to say it looks pretty good.
Awesome. So what I kept saying in the middle of it all was that the only silver lining on a sell-off that was so fast and furious that in 11 weeks we went down 22.8% was that with a market that is so volatile and so aggressive, that if we can sell off that quickly and that fast and so much, we can go back up just as quickly and so fast. In fact, what ended up happening was we went back in half the time. We were able to regain all the losses of Liberation Day or Independence Day, whatever it was, in a shorter period of time than it took to sell off. And that was extraordinary. Yes, we did. The president did tell everyone to buy the market. Yes, we did put a bunch of pauses on there. Yes, we had, the realization in the bond market that if we don't do deals, we could be in a jam. So it was not an easy transition through March, April, May. But we are now in June, and so look, this is where we are. Thank you for all that. I think we've really laid out an amazing description of what's happening, but we are still at a point here in the end of the June where we need deals to be done.
But we need to get through this. We need to have this budget bill done. We need that budget bill to be
so
done.
You're convinced that needs to happen before we get our tariffs done.
I just think so. I think so, because then that gives us more clarity on the tax implications of the tariffs. And it gives us a higher degree of confidence that we can make this tariff deal. We're going to give up a little bit there, but we're going to get it back on the much more favorable tax rates.
Okay, so a tariff is a tax. A tax is going to impact our economy in a huge way. When we had 185, 145, 70, 40, 30% tariffs on companies, GM, Ford, that were not able to give guidance because they didn't know the cost of goods sold. Small companies that were trying to get ready for back to school, for Christmas, right? The port in LA was looking at a 50% cutback in the amount of imports that were coming in there. The truck stops in the Midwest were seeing half the flow that they had. We saw boats lining up, as per Dan Ives, boats lining up in China Harbor, right? That were not able to fill their containers because they did not know the cost of goods sold. That time of uncertainty is past, but it's not done yet. So we are going to need to come up with some etched in stone situations where we're going to need deal. Look, we go back to Lutnick and Besson, who said deal, 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 done, done, done. It, in fact, was not the case. And that was for whatever and other reasons. I think they may have spoke prematurely. But at the end of the day, all those things do need to happen. Now, we could have some good deals. We may not be able to have some good deals. Our contentious relationship with China is still not over. Yes, we made nice, and I think we are starting to look a lot better on the world stage than we did in the dark days where Mr. Trump was sort of very threatening and bullish with a lot of those countries. He's looking better now. He's maybe min-marinating and aged like a fine wine, right, from how he was in February and March, right, because he was a little gruff and a little rough on the edges.
One other major beneficiary of our military action in Iran,
right,
is that it makes China much less likely to move on Taiwan.
Huh. Okay.
Because
wow, that's
I mean that's we could talk about that for an hour.
Right.
But they just saw what we did in a very complicated, very sophisticated,
don't mess with us.
Military maneuver.
Right.
From the middle of the country over to Iran, back again,
right,
et cetera,
that was a 39-hour flight.
Right.
People need to understand that.
So there's been obviously a lot of talk that China eventually wants Taiwan and they could move on them, et cetera, et cetera, et cetera.
Right.
That makes them much less likely
to go up.
They don't want to provoke. Look, what was everybody talking about in the Trump-hating media 3 weeks ago?
Right.
They were talking about the taco trade, where Trump always chickens out. You haven't heard even a whisper of that for 4 or 5 days now. After we did what we did to the nuclear sites in Iran.
Okay, you know what? We could go ahead.
And I think that makes China. Look, who knows what's really going on there? But that makes them much more unlikely, to move on Taiwan, because they will know that if Trump tells them not to, he's not bluffing.
Right. Okay. So look, I think we've laid out incredibly. Tim, you're just amazing. The way you're able to analyze the big picture. We've gotten through so much. We've basically been able to give you an amazing forensic breakdown on what the first half of 2025 looked like. The ups, the downs, the roller coaster of it all, right? Geopolitical, tariffs, our earnings season, all of that. We've basically covered everything. So now, if you're watching this, and I know you are, right, you have a way better sense of where we are, where we came from, and what it looks like going into the future, right? We are not psychics. We don't know what the future will bring, but I would imagine if you kind of looked and analyzed this, we've laid out, look, it always will be a puzzle. There will be pieces missing from the puzzle, but I think we've been able to put together a bunch more pieces so we have a way better outlook on what's going on. Timmy, amazing.
Always a pleasure.
It was a pleasure. And you know what? Trade like Einstein, Money News Network, and that's all I got to say about that.